Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Happy Wednesday, everybody. 2 brief matters to touch on before the main stories. First, this month, on the 8th of January, we will see the 3rd plenum for the Central Commission for Discipline Inspection. Commentators explain that the communiques from these meetings are important as they send key signals about areas and sectors that will be in for some enhanced discipline. Second, in recent weeks, Beijing censors have removed 3 articles from respected and at times outspoken Chinese financial media outlet Caixin. The 3 articles include a report from the area of the recent Gansu earthquake, an editorial on the occasion of the 45th anniversary of the 3rd plenum of the 11th Party Congress, which celebrated reform and opening up, and a report on deaths of prominent people around the world in 2023. Quote, "The Gansu story calls into question the victory against poverty, in that area at least. The editorial can easily be read as critical of Xi, and the deaths of 2023 story leads with Li Keqiang. I will guess that language like to effectively address chaos and confront challenges, a realistic and fact-based approach is essential. During the Cultural Revolution, China's national economy was on the brink of collapse, yet officials continued to insist that the situation was exceedingly favorable and improving. In reality, the livelihoods of the people deteriorated, marked by poverty and backwardness." In the editorial, triggered some political alarms. "I hope the authorities do not decide to rectify Caixin. That would not be constructive for rebuilding domestic or foreign confidence." End quote. Okay, now let's move through several salient economic updates from the last few days. The People's Bank of China injected nearly $50 billion worth of low-cost funds into policy-oriented banks last month. This net injection of 350 billion yuan was the largest increase via the pledged supplemental lending tool since November 2022. In a statement yesterday, Tuesday, the central bank said that the outstanding amount of the People's Bank of China's pledged supplemental lending program to policy banks lifted to 3.25 trillion yuan, $456 billion at the end of December from 2.9 trillion yuan in the previous month. The PSL program is used by the government to shore up the property sector and stabilize growth. ANZ Bank senior China strategist Xing Zhaopeng expressed on the news, quote, "The PSL program is the most direct and effective way to transmit funds to the economy. It will be significant to the economy if the size can expand." End quote. US-based Bloomberg explains the PSL tool has a controversial history. It was last used heavily between 2014 and 2019 for the rebuilding of so-called shantytowns, as it helped halt a property slump at that time, but at the same time inflated home price bubbles. Some economists have called it helicopter money or Chinese-style quantitative easing. The interest rate on the PSL loans was 2.4% at the end of September, lower than the 1-year policy rate and the benchmark lending rate of banks. Next up, US billionaire Elon Musk's Tesla has been dethroned as the world's best-selling electric vehicle maker for the first time by Chinese company BYD. The US group delivered over 484,000 cars in the 4th quarter, more than the 473,000 anticipated by analysts. However, BYD reported record sales of battery-only vehicles of 526,000 for the same period. This regicide reflects the rise of what was a little-known Chinese group only a decade ago, as well as China's growing clout in the global automotive industry. After surpassing the US, South Korea, and Germany the last few years, China may have overtaken Japan as the world's largest passenger car exporter in 2023. Danny Hewson, head of financial analysis at AJ Bell, said BYD's electric cars were, quote, "becoming increasingly visible on European roads thanks to keen pricing." Tu Le, founder of Beijing-based advisory company Auto, expressed with the news, quote, "If any doubt is left in the West, I hope this is the final data point that points to BYD's strength and, as importantly, how China EV Inc. has bullied its way onto the global stage." End quote. There are a few matters to note, however. Tesla generated much more revenue and profit than BYD because it sells much higher-priced vehicles and relies on just 2 models for most of its sales. Cybertruck sales are also not included. BYD's sales are also driven by a strong presence in the Chinese home market, the largest EV market in the world, but does not sell in the US, where it faces a 27.5% import tariff. Next up, and finally for the economy, UK-based The Financial Times writes that the past 12 months have been punishing for foreign exchange-traded fund investors with exposure to China, but fresh signs of national team involvement might give risk-averse market participants pause for thought. ZBen Advisors noted in a report released last month that institutional investors were continuing to increase their equity holdings via ETFs, and that this activity was extending beyond the historic core Chinese national team players. The outlet explains that the national team term was coined in 2015 to describe large state-affiliated institutions that intervened to prop up the stock market, and was also used to describe the institutions behind very large inflows to some broad market ETFs in August last year. However, in the latest report, ZBen for the first time noted significant involvement from a range of other institutions, including China Reform Holdings, a large state-owned asset management company, and insurers China Life and New China Life. In addition, in contrast to earlier buying, the latest buying has been more focused on specific sectors. Meanwhile, almost a third of 417 respondents to Bloomberg's latest Markets Live Pulse survey say that they will increase their China investments over the next 12 months. That compares with just 19% in a similar August survey, and is higher than the 25% who plan to boost exposure in March. Only a fifth now anticipates cutting their China holdings. Chinese stocks peaked in early 2021 and are now down almost 60%. The decline, Bloomberg explains, reflects a real estate debt crisis, eroding consumer confidence, and China's slowing economy. Now, the country's stocks have collapsed so much they are among the world's cheapest relative to their profits. It appears then that for some, a slump of almost 60% is a signal to buy Chinese stocks. Indeed, the price-to-earnings ratio based on expected profits for Chinese companies sits below 10, almost half the global average. Peking University Professor of Finance Michael Pettis, in a tweet on these Markets Live Pulse survey findings, observed, quote, "It's a risky call because politics matter so much, but I expect Chinese stocks will do well in the first half of 2024. However, on the first trading day of the year, things didn't get off to a good start. Chinese stocks recorded their worst start to a year since 2019. The CSI 300 index ended 1.3% lower on Tuesday, while the Hang Seng China Enterprises Index declined 1.7%. It was the worst first trading day of the year since 2019 for both gauges. Next up, Hong Kong. Happy New Year, everyone. I hope you're enjoying today's video. If you are, I have a huge favor to ask. That is to like and subscribe. This is the best way that the channel can grow and be shown to new people. It would be amazing if the channel could climb to 100,000 subscribers by the end of 2024. If it does, I will transition to working on China Update as my full-time job. This should mean better quality across the board. To do this, I need your help, and all it takes is 2 clicks of the mouse. Sharing this with people who you think would like it is also a big help. And for those who want to help keep the channel financially sustainable, Patreon and Buy Me a Coffee links are in the description below. I look forward to growing the channel this year as we continue to follow China together. Thank you so much, everybody, for the ongoing support. Former media tycoon Jimmy Lai has pleaded not guilty to all charges at his Hong Kong national security trial, a trial being watched by the world. On Tuesday, the lead prosecutor, Anthony Chow, told the court, quote, "This case is about a radical political figure who conspired with others to bring into hatred and stir up opposition to the government of Hong Kong and the central authorities, and to collude with foreign countries or external elements to endanger national security," end quote, adding that Lai was, quote, "the mastermind who used his platform to pursue his political agenda and orchestrated a conspiracy with the so-called democracy and freedom advocacy group Stand with Hong Kong, Fight for Freedom." End quote. The senior prosecutor then presented a graphic to the panel of 3 government-picked judges that he said showed Lai's political connections, including those in the United States, with the US-based director of the Interparliamentary Alliance on China, a Japanese former legislator, and others. The prosecution also cited Lai's ties to former U.S. Deputy Defense Secretary Paul Wolfowitz and a former U.S. Army general, and a meeting with former Secretary of State Mike Pompeo. As a billionaire media mogul, it shouldn't be considerably surprising that Lai rubbed shoulders with figures like this. US-based Wall Street Journal reports that prosecutors shared snippets of Lai's interviews and tweets, as well as communication records between him and other advocates, in which they say he lobbied for foreign governments to take action. One commentator coolly observed that in this new era, Hong Kong editorials from the paper that was operating legally in the previous era are now evidence of sedition. This week, the governments of Australia, Austria, Canada, the Czech Republic, Denmark, Estonia, Finland, France, Germany, Ireland, Italy, Japan, Latvia, Lithuania, Luxembourg, New Zealand, Norway, Slovenia, Spain, Sweden, Switzerland, the Netherlands, the United Kingdom, and the United States jointly published a Media Freedom Coalition statement demanding Beijing respect media freedom in Hong Kong. Soon after this release, PRC Foreign Ministry spokesperson Wang Wenbin hit back, expressing, quote, "This is a smear against press freedom in Hong Kong, an attack on the Hong Kong Special Administrative Region, government's legitimate law enforcement, and a move to embolden those who are anti-China and engaging in destabilizing Hong Kong, such as Jimmy Lai. China deplores and firmly rejects this so-called statement from a handful of countries in the name of media freedom." End quote. Okay, that is today's episode of China Update. Thank you very much, everybody, for watching. Have a good Wednesday, and I will see you all tomorrow.